We spoke with Kaleeswaram Arunachalam, that's the CFO of the company, and began by asking about the highlights of the quarter gone by. My colleague Mahima spoke to him. Listen in.
Fundamentally, if you look at it, in about 5 quarters back, we launched the Crompton 2.0 strategy, where we said the focus is going to drive the business towards growth. At the same point of time, ensure that our unit economics are very strong, and this will help us to invest behind growth, which is both in marketing investments and behind innovation. So we are able to bring in meaningful new products in category after category. We also said there are 2 categories that we'll specifically watch out for transformation. One is lighting and butterfly, which I'll talk about it separately. Starting with ECD, I think we have delivered a 13% growth in ECD. It's a very, very strong and broad-based growth across segments that we have seen. Our pumps portfolio has grown at about 20%. Our appliances continue to grow at about 20% for many quarters now. Our fans portfolio has grown decently in a lean season. And fans, we continue to premiumize, plus we are working upon some of the geographical and channel expansion also. Lighting, if you look at it, about few quarters back, we said it's an area of focus and we want to ensure that we price it right. At the same point of time, move our business towards ceiling, batten, away from lamps. I'm very happy to share that after many, many quarters, we have delivered an industry-leading growth in lighting business with about almost a 20% plus growth in our non-lamps portfolio, helped by premiumization and new adjacencies that we have entered within our lighting business. It is important to note that Butterfly is a business where we called out very clearly H1 is going to be a time where we will get our act right on pricing, channel management, and optimize some of the operating costs that we are working with. That has been delivered, and Butterfly has also delivered a very strong EBITDA margin. Overall, while the business has grown at a very strong growth rate across categories, it is equally important to note the margin expansion that we have delivered at Crompton. Whether it is lighting or ECD, we have seen strong margin expansion. This is aided by the cost program that we are working on with Unnati, the price and mix management that we have done, coupled with the operating cost leverage that is starting to kick in. The journey has started, and we expect this to be a long-term program that will be driven by Crompton 2.0.
Right. Mr. Arunachalam, margins have increased this quarter as compared to, the quarter last year. But there has been a time when you were operating on margins of 14 to 15%. So I want to see and understand that, do you see yourself coming back to those kind of margins operating around 14 to 15%? And if yes, how far are you from achieving that target?
See, the way we are looking at is fundamentally when we said Crompton 2.0, step 1 is drive business revenue growth more than profits. We think profit will follow once the revenue growth is taken care of. So our first aim is to continuously deliver a double-digit growth year on year. And we are on track for it as we look at both the medium term and long term. Margin is an outcome. When we started the Crompton 2.0 journey, we said we will start with a 10% EBITDA margin. And over a period of time, we'll expand that both with the back of operating leverage on scale, coupled with the premiumization and mix optimization that will happen at a portfolio level. You're already seeing margin expansion that has happened from last year to now. Now, this journey will continue. Well, I don't want to call out a specific target, but it's not that we're taking a rise off it. Prima facie focus is growth, and we truly believe growth will deliver margins also.
Right. I also want to understand that you've constantly been growing in double digits, and this is probably the 5th quarter where you've seen a double-digit growth. Can we conclude that this is a new normal for Crompton?
No short-term guidances, as you know, but in the long term, yes. Fundamentally, we think there's a potential to double the business from where we are in about 5 years' time. Which means that the growth rate is going to be about 14 to 15%, coupled with existing categories and some of the new categories that we want to look at.
All right. So then I want to understand that what's the way forward? You did 7,300 crore of revenue in FY24 and around 440 crores of bottom line. Now, you've already done a top line of 4,000 crore in first half itself. So I want to understand, where do you expect these numbers to go by the end of FY25?
Yeah, so the internal aspirations are obviously high in terms of where we want to land and how do we want to go. But allow me not to provide a short-term guidance. That's something that we refrain from. We would like a performance to be consistent, predictable, which is what we have laid out as part of Crompton 2.0, and quarter on quarter we have been delivering that.